Okay, well, Rajat Bhattacharya is with us. He's senior investment strategist at Standard Chartered. He's joining us. Rajat, good morning. Good to have you with us here. Are we in a risk-on environment? Do you think, or it's going to be more choppy and very, very sector stock specific from here on? I'm talking about India specifically, Rajat. What's your sense?
Hi, morning, Prashant. Yes, well, it looks like risk on with India's back to almost record highs, right? And that was after the elections. So as we know, you had a big, spike in volatility, but it was a great time to buy. I mean, we remained buy on dips in India. I mean, that was a classic case of one-day markets falling whatever 8-10%, and that was the opportunity to get in. Why I say that? Because we've been maintaining that there are 2 or 3 markets in the world that gives growth and ROE. So the 2 growth markets are, of course, the US and India. And in terms of ROE, 3 markets stand out: US, India, Taiwan. So if those 2 keep working, and there's no reason why we should doubt those, then India is always a buy on dips. So yeah, it's a risk on market.
Okay, so risk-on market. India's a buy on dips. I think this is music to the ears of investors listening to you right now, because the fear is that we are perhaps headed into some sort of a consolidation or a correction, which hasn't come ever since COVID. This market has been rallying since the end of COVID. This market has been rallying through and through. But you said US, India, and Taiwan stand out for you. For the rest of the year, do you think emerging markets like India can continue to outperform developed markets, or do you think the tide will turn?
Yeah, I mean, in near term, of course, there is some volatility coming through, as we can see in US markets as well. I mean, the big thing that we are looking for is some political risk coming from Europe. That's one. Then you talked about the yen weakness, which is filtering through the rest of Asia. So that keeps the dollar up. As long as the dollar is up, EM is under pressure. So we need to watch these French elections in the coming weeks, in the next couple of weeks. And then the yen. Apart from that, if the dollar behaves, and then if the French elections, we don't expect a big surprise in terms of the far right winning an outright majority. Maybe they would be getting a lot of extra votes from there, but not a majority. But if that is true and Macron stays, then the European risk goes away. In that scenario, and we do see BOJ intervening somewhere around 160 or thereabouts, you should see some flows coming back again into markets. Longer term, you need to watch the US job markets. The next week's employment report is very key. We need to watch that.
So all in all, you're not too concerned about the global construct. You're saying the political risk emanating out of euro or the weakness in yen should be manageable and will not cause a dent to the India story or the global rally as of now, right?
That's correct. India stands out. I mean, I keep repeating that almost in this forum and elsewhere, is that yes. India offers growth. And this with the political risk in India gone now, and you have a new government in its 3rd term, this government is probably going to focus more on consumption, rural consumption, the infrastructure story. Infrastructure story has been a long-term story. But we expect this government to focus more on rural consumption. That means, good for tractor sales, good for everything related to farm-related or motorcycle sales and everything around that. And that keeps the earnings growth story intact. That keeps the ROE, the return on equity story intact. And in India stands out. So the flows, in terms of global flows, I see India attracting more of the equity flows and, of course, the bond flows as index inclusion comes into play.
What about the budget opportunity? Are you seeing any opportunity coming out of the budget? Because that's the big trigger we're watching here.
That's correct. So you're probably going to see, given what I said, near-term volatility in global markets, everything, you're probably going to see some choppy markets until the budget. And the budget is probably going to be the one to watch, where people will get more assurance that, yes, there will be a lot of growth supporting measures for promoting rural consumption. At the same time, not risking the fiscal balance. So there we don't see any fiscal risks because of that RBI dividend that the government got. That should offset any increase in expenditure in the rural consumption or the infrastructure area. They should offset each other. No fiscal risks are likely. Once people have assurance of that, probably going to see the new flows coming in.
All right. Well, budget it is, right? I mean, and we reported yesterday, a colleague from Delhi reported the sort of what's top of mind 100-day agenda and maybe PLI schemes for more sectors. Make in India, I mean, continues to be top priority. Rajat, great speaking with you. Thank you very much for your time. Appreciate it here on CNBC-TV18.